Dear viewers, in this video you will know how to protect your portfolio during stock market crash. The same video is available in Bengali. আপনি যদি বাংলায় শুনতে চান এখানে ক্লিক করুন. I am Prashanjit Paul, author of the best-selling book How to Avoid Loss and Earn Consistently in the Stock Market, and also actively investing in the stock market since 2010 and achieved financial freedom. So let's start. How to protect your portfolio in stock market crash. The first thing I have observed since my last 10 years of my experience, in the last 10 years, what I observed is normally the price of gold has an inverse relation with the stock market. It means over a given period, if stock market, like if Nifty or Sensex falls, normally the price of gold increase. Let's have a look at some charts with some past example. Like here is a chart, a very recent chart, like from March 21 to April 21. Nifty or the Sensex generated around negative 3% return, whereas at the same time gold generated 4% return. Let's move back a year ago. So during COVID times, last year during COVID times from February 2020 to May 2020, during a time while the Nifty crashed, but gold generated 13% positive return. If you move back earlier, like from the period January 2017 to December 2018, in this period, while Nifty or stock market generated a great return, 35% return, but at the same time, gold didn't generate enough return, only kind of 7% return. So if you can also check personally from any price chart, what you will find that normally the relation between share market and gold is inverse. At a time if the stock market crash, gold price increase. So now how to invest in gold? See, there are obviously a way that you can purchase gold or jewelry, gold bar and all, but in all this case there are some making charges, there are some associate cost which while you sell it you don't get back such cost. So and better way to invest in gold or an electronic way to invest in a gold is a Goldbees, GOLDBEES. So Goldbees is an exchange traded fund which is a passively managed fund which directly the price of Goldbees is directly linked with the price of gold. So as you can simply purchase any stock from your demat and trading account, similarly you can purchase Goldbees from your same trading and demat account. Like I have earlier mentioned, like if you want to indirectly invest in all the Nifty 50 companies, there is an option called Nifty Bees. So as the Nifty Bees, Goldbees is a similar exchange traded fund. So if you have a balanced portfolio like with some Nifty Bees and Goldbees, so what you will find normally these two instruments have the price relation of these two instrument is an inversely linked. Now if you are already having a trading and demat account but paying high brokerage, normally all the banks, HDFC, SBI and all have the high brokerage. If you want to move to zero brokerage structure, you can open account from companies like Upstocks, Angel Broking or Zerodha. The link is given below. Now you can open a completely free of cost trading and demat account, no account opening charge from Upstocks or Angel Broking. The link is given below in the description of the video, and on those accounts you don't have to pay any brokerage as well, zero brokerage while you purchase or you do any delivery trade. It means if you today purchase Goldbees and sell Goldbees after 1 month, 1 year or whatever you like, or if you purchase any stock today and sell after 1 year, 1 month or whatever, then you don't have to pay any brokerage. So to protect your portfolio from an overall market crash, Goldbees is a good option because gold acts as an hedge of Nifty or of the stock market. Now let's have a look. If you have already invested in some individual shares, how you can keep such or how you can choose such individual shares which will fall less during market correction. See, there are two types of business. First is cyclical business and second is non-cyclical business. You will find during any stock market crash, it is the cyclical business that corrects the most. What are the cyclical business? You can like name it real estate companies, infrastructure companies, metal companies, aluminum companies, sugar companies, even banks to some extent. So if you look during any market crash, these are the companies: metal, real estate, then sugar, banks. These are the companies or these are the stocks that corrected the most. Now how you can separate or how you can find whether a company is cyclical or non-cyclical? See, let's have a look at the examples of non-cyclical business like FMCG, few pharma companies, few IT companies. Not all pharma companies are non-cyclical, few selected. The easiest way to differentiate between a cyclical and non-cyclical firm is a profit margin. So a cyclical business means for a few years, for maybe 1 year, 2 year, 3 year, the profit will move up, and then suddenly the profit will keep falling down, right? But for a non-cyclical business, the profit remains the profit growth, maybe 5% every year, 5-6% kind of profit growth every year. So you need to look at the profit margin of any company. If you find profit margin means you can consider the EBITDA margin or net profit margin. EBITDA margin, the operating profit margin that we call. Operating profit margin provides a clear, better look to judge whether a company is cyclical or non-cyclical. So have a look at the operating profit margin or EBITDA margin of any company for the last 5, 6 or even 10 years. If you find a margin of this any company in the last 10 years fluctuated a lot, for example, it was 10%, then gradually it moved to 15%, then again it drops to 10, 9, 8 and so on, then the company is a cyclical business. If you find that no, in the last 10 years margin remained in a very small range within 14 to 16%, so it from 14% it moved to 15%, then again coming back to 16% and then again coming back to 14, but it remains in a very small range, then that company is a non-cyclical business. And a high quality, a high fundamentally strong stock with good cash flow and good balance sheet normally corrects less during any stock market crash. If you subscribe follow my portfolio, if you are already a paid subscriber, you might already noticed that despite the market correction in the last 1-2 months, most of my portfolio stock didn't corrected, rather increased. The share price increased a lot, because you will find most of these companies belongs to non-cyclical, selected pharma and selected specialty chemical segment. If you interested to know my portfolio stocks, follow my portfolio where I simply broadcast what I am buying and selling with my allocation, then you can follow a link given in the description box. You can check there in my website. There's an annual membership fees, and with that I simply broadcast what are the stocks I buy and sell with the allocation. So in follow my portfolio, all the recent stocks of mine didn't corrected a lot, because all of these stocks belong from non-cyclical business. If you look at the margin profile of these stocks, you will find the margin over a period of 5, even 10 years, they remains in the range amount. Now, not only non-cyclical, after non-cyclical, you have to now look at the balance sheet, cash flow, you have to look return on equity, return on capital employed, debt to equity ratio, then cash flow, whether it is matching with profit or not. So all this, if you want to select individual stocks, if you want to select a stock which have the limited downside protection with the upside potential, then I have a good news for you. I am coming up with an webinar in eLearn Market in the upcoming 15th of May, where I will share stock selection technique with limited downside but huge upside protection. There's a 2-hour webinar, and this 2-hour webinar I'll also conduct a question and answer session, so you can ask me any query. See, in YouTube, if I publish a 2-hour video, then most of the people don't watch it at all, and most of the people will skip. But this 2 hours webinar is offered at a very nominal price, only $590, but I have a coupon code for you. If you use my coupon code, then you will get it at only $395, the coupon code, and the link is given below in the description box. You can check out the webinar, because that from only $395, that might cost a price of a pizza, but with only $395 you will get a lifelong knowledge how to select high quality stocks having downside protection with upside probability. Like while the market crash, still what are the stocks or which kind of stocks will offer you a downside protection. I will not only share you the theory, but also with the live examples, like what are the stocks that matches the criteria. So you can check out the link and visit the webinar. If I summarize, like during stock market crash or during stock market correction, normally gold do much better. Over any given period of time, the price of gold is inversely related to the stock, overall the Sensex or Nifty movement. So if you want to keep your portfolio, I mean if you want any hedging strategy, you can use gold bees as an hedging strategy. Over a period, if stock market or if the Nifty or Sensex generate negative return, then gold mostly will remain positive. The second strategy is, if you are an individual stock picker, if you want to pick individual stocks which have offered downside protection despite stock market crash, then first of all you need to select non-cyclical business, non-cyclical and also fundamentally strong stocks, because in every stock market crash, if you look at the any stock market crash, not all the stocks corrects, only limited, despite although most of the stocks corrects, but many stocks still remains, very stable. So during stock market crash, if you want to protect your portfolio, you need to stick with non-cyclical business. And finally, if you want to select non-cyclical fundamentally strong stock having downside protection with upside, then you can visit my webinar. The link is given below. The webinar is hosted on the eLearn Market platform that you can get at only $395. If you learned something new from this video, do make sure to press the like button and share this video with your friends and subscribe this channel. Also share your feedback in the comment section of this video. If you have any questions, you can also share that question in the comment section of this video as well. I'll come up with another insightful video on the next week. Till then, stay tuned and happy investing.